Welcome to the Self Storage Show, where I have conversations with my industry friends, talk with owners and vendors, and share tales about my management company, 3 Mile Storage. Let's go. Hey guys, thanks so much for tuning into the Self Storage Show. Hey, right at the top, I want to talk about something that's really valuable. You don't want to miss out on it. It's 3 Mile Domination. What this is they optimize your Google business profiles, okay? And we all know for self-storage, we live and die by our rentals. I guarantee you, if you don't have your profile optimized, you're losing out on rentals every single day. So go to 3miledomination.com. Right now, they are doing free audits of your profile. You'll see the big red button right there. Book your free audit right now. Book a time. We'll go through your Google profile optimization session in real time together. Send you back reports. So you have an action plan. It's very valuable. Okay. So again, go to 3miledomination.com and book your audit right now. Hey everyone, this is Jim Ross with the Self Storage Show again. Another episode coming at you. I got Ryan Dooley. He's a owner and broker for CRD Realty down in Texas. What's going on, Ryan?
Hey Jim, not much.
Not much. Whatever. You're always busy. Being a broker, you should be busy. Anyway, that's how it goes.
Yeah, we'll definitely get into that.
Yeah, we'll get into some stuff here first, but kind of start off the show here. Kind of give us a little cliff note version of who you are, kind of background and what you do.
Yeah, thanks. So I'm the owner broker of CRD Realty. We're a commercial brokerage located in Conroe, which is some call it far north Houston, but North Houston. So I've been focusing on storage for probably the past, I'd say 3 years. So early 2020 is when we started focusing on storage, and it's been a wild ride. It's been really good. A lot of fun, a lot of new experiences, met a lot of new people such as yourself, and it's been good. So
good. Huh? Hopefully you're doing this, so you'll meet even more people. So see if I can help with that. So being in the last few years, yeah, you definitely kind of got in around the beginning of the crazy wild ride. So
yeah, it was got in. Well, I mean, so when I decided to get into it, I was looking for a client that was looking to do a 1031 and decided to look into storage.
yeah.
And so originally they came out of multifamily. And so they had just sold off a duplex portfolio and wanted to get into storage. So I started looking into storage and realized it was kind of a niche business. Like there's not a lot of, at least brokers back then. I didn't see a lot of brokers that focused on it. There was a couple in the area and in the state that really hit it hard and were successful with it. But other than that, wasn't too much. And so started diving into it, looking at it, and opening up OMs, researching it, and realized, man, there's an opportunity here. And so then COVID happened, February, March, April, June. I got my first listing for a local owner here in Conroe, and then got that under contract. And then things started going a little nuts with COVID. People started getting a little scared. Banks started getting a little more tight, and that deal busted. And so I was like, man, that stinks. So that was my first thing. And I worked so hard to get that under contract, all this stuff. And all right, well, let's do it again. So went back to market, found another buyer that was local that owned another storage property. And this one fit right in his portfolio. He got it under contract and we got it closed in August. And then, man, it just went, I don't know, downhill or uphill from there. I guess uphill.
That's how you look at it.
It went really good after that.
Oh, that's awesome. I'm always curious as far as on the broker side of things, you see them, listing these, multi-million dollar facilities, like, oh yeah, it must be nice, but it's a grind too. I mean, you gotta hustle for it.
Man, it is. It's yeah, there was a deal that I got in 2021. So biggest deal I'd had up until that point, and it was a big boat and RV facility. And I'd already contacted the owner, reached out to him early on in 2020. It was one of my first contacts that I reached out to just to introduce myself and CRD, and called myself an expert back then in early 2020 in self-storage, but really wasn't at that point. And
Right.
But anyway, so made the contact and stayed in touch with him, and then found out he ended up listing it with another broker. It wasn't a self-storage broker, just a local broker that I'd known and actually done another deal with. And so I I reached out to him and said, hey, I've got a buyer that's looking to buy this property. And so he said, okay, great. Well, when I get the package together, I'll send it to you. Well, some months passed by. I stayed in touch with him, never saw a package, anything like that. And
Yeah.
so I ended up reaching back out to the broker. He's like, yeah, I ended up losing the deal. And so I was like, oh, okay. He's like, you can have it if you want. I was like, all right, great. So I reached back out to the owner. The owner said, look, we got to get this thing sold in 2 months. And so I said, all right, well, I can do that. And I'll send you the listing agreement. We'll get it done. I'll get the package ready and we'll get it out there. And sure enough, 2 weeks later, I had the package ready. It was out. We got a contract in about a week, and that thing was sold by August. And so we were good. And
Nice.
I mean, that was a good deal, but it took some hustle, man. I mean, it took staying in touch with them. It took a lot of work to get that deal done.
It's about the relationships you have, the relationships you build and cultivate, because you don't know if it's gonna. Well, that sounds like that won't happen pretty quick, but I've noticed deals have been like years in the making of relationships and talking with
Well,
people.
I mean, exactly. Yeah, I mean, that deal from contract to close, relatively, that was quick, right?
Yeah,
But
yeah.
the time leading up to me actually getting the listing, that's what took the work. I mean, that was a year and a half in the making of reaching out to that owner. Thought I lost the deal, then it falls back and where it's an opportunity to have a listing again, where it's available again, and then I end up getting it. But I mean, there's other stories just like that where it just, I mean, you're staying with this owner for a year or more and staying in contact with them until they're finally ready, or the property is not where it needs to be for them to get the price that they want. So they need to, as you know, as a manager, they need to improve pricing through rate increases, occupancy. And so you help them understand, if you want this price, this is where we need to get to show some performance, some history, a track record for at least the last 3 months or so of, this is your occupancy, it's possible, these are the rates you're capturing, this is possible. And so a new buyer can come in and look at this and say, okay, here's what he's done, so I can take it and keep on improving the property to get to this point or this sort of return in a year or so. And
Talk to
so,
me, talk to me about that for a second, because I'm always curious about that because again, that's what I do is third party management. So I'm always about, revenue, revenue, revenue. That's what I'm supposed to be doing here.
yeah.
But on the broker side of things, I mean, you're coming in, you're like, okay, we got to show, a track record of this facility can, make money with proper revenue management. But of course, on the buyer's side, aren't they looking for the deals that are totally mismanaged and having the upside? How does that play
Yeah,
out?
so I think it's all about a story. So the
Yeah.
more believable the story, then the more likely that property is to be bought. And so it may be sold on I mean, right now, probably a 5 or 6 cap. Five would be really low, but
Yeah.
6 cap maybe on a class A or B type property, maybe even a C. But the story shows that, hey, I can take this and raise rates, or occupancy has been mismanaged, marketing's been, lackluster, so I can
Yeah.
take it from 100,000 in revenue to 150,000 revenue year one. And so my cap rate goes from a 6 to maybe an 8 year one. So yeah, there's a story to tell. I can believe it because all these other properties around here are performing pretty well. This
Yeah.
property actually was there a year ago or 2 years ago, but then the owner got sick or something happened, right?
Sure.
And the property just kind of fell out of management. And so I can take this over at a decent deal right now, even though cap rate doesn't make sense based on my 8% interest rate. But I can take it year one and make it make sense in cash flow for myself because the story's there. I can make that happen.
Gotcha. That's great. So, do you? I'm just curious too. Is when you're talking with these owners and you see those kind of not results of like, here's where you're at, here's where you got to get, and you mentioned what, like a 3 month track record. That's long enough to kind of prove a point, basically, that it's that's like
Yeah,
consistent.
I mean, I think it helps a buyer understand that it's possible, right?
Yeah.
I mean, so if you take a property that has been hit 60% occupancy since it was built and it's never gone above that, then it's really tough to say, hey, you can come in and take this property to a 90% occupancy and improve revenue by 25% or whatever,
Sure.
when it's never been there. But if you can show some sort of history of the property being at least improving to that point,
Yeah.
or being at that point or close to it, then it's more than the buyer looks at that, and the lender looks at that and says, okay, yeah, I can get on board with buying this on a pro forma
Okay.
kind of cash flow or returns.
That makes a little more sense.
Yeah.
So I got to ask, so that you're down in Texas and all that, and then maybe Texas is its own world. I don't know, but I would assume kind of what everything else is going on in the in the United States here with storage. It's not like it was just a couple of years ago, even a year ago. It's changed a lot.
Man, it's changed a whole lot. So I'd say I really started noticing it probably late 2022 last year. So that's when I started having deals bust and things kind of fall apart because of financing. And then, I mean, this year I've had more deals bust than I've ever had in the last 2 or 3 years.
Right.
Just and really, it's been the smaller deals, and we can get into that too. I mean, people that have better access to capital, that are able to put more money down, they have a higher probability of getting that deal closed.
Yeah.
Obviously, um, so I mean, in terms of activity, I mean, it's gone from just crazy gangbusters in 2021 or late 2022, or I'm sorry, late 2020,
Yeah.
2021, and most of 2022 to, I mean, just a standstill. And honestly, that I would say that has to do only with interest rates. I mean, interest rates have just killed financing. And so what's happened is you have properties that really the prices have come down, but not enough to make sense for at least the buyers that are buying the 1, 2, maybe even $3 million properties that are using traditional bank
Yeah.
financing.
Yeah.
So when you're buying a property at I mean, best rate right now, maybe 7.75% or 8% generally. If you're a good customer, have a relationship, if you're buying a property at that and your cap rate right now, even for Class C in our area, you're looking at a in-place cap rate of about 6 or 7.
Hmm.
So immediately, unless you go in and improve that property, it's really not going to work for you. And so pricing is just, I mean, it really, properties have gotten, I'd probably say, less affordable than they even were back in 2022 and 2021.
Wow. That's it's hard to make them pencil out right now for sure. I've heard that from a number of owners being like all gung ho about let's go into it, and they kind of get slapped with reality. I'm like, yep, it's not that easy anymore. Not to be all doom and gloom, but that's kind of the reality.
Yeah. I mean, it's
Well,
a, it's a, different environment than it was a couple of years ago. I mean, the cap rates, they've adjusted a little bit up, but
mhm.
not enough to make sense for traditional finance. So if you have the access to capital, like some of these REITs and private equity
Yeah.
that are going in and buying the larger properties where they're basically paying cash. So they have funds set up where people have invested or pooled their money basically.
Yep.
Um, and so they can go in and get these deals done on these lower cap rates that some are even at 5%. I've had one
Hmm.
off-market deal that I've taken to a large private equity group
Yeah.
that was looking at it on a in-place cap rate of 5%, and on pro forma it wasn't going to improve much. It was about 5.5%, and they were interested in it at that price.
Wow.
They could make that work. And so for anything less than that, for a buyer that's coming in with a bank, local bank, traditional financing,
Yeah.
it's impossible. It's not going to work. And it's just, I don't know, that margin between what a buyer is willing or able to pay right now for a
Yeah.
property and what a seller is willing to sell for has just increased. So sellers are stuck on 2021 and 2022 pricing,
Yeah.
whereas the buyers are not able to pay that because banks aren't lending at rates that make that possible anymore. It's just not there. And on top of that, banks are making it where the LTV or LTC has now gone to, instead of 80% loan to value, now
Yeah.
it's 60% or sometimes 50%. And
Really.
so they're having to put more cash into the deal to make it work. and make sure that debt service coverage ratio is hit. Because I mean, it's honestly just gotten tighter. I mean, the cap rates, deals have just not have gotten less affordable, in my opinion. I mean,
So when you're talking to some of these owners, and I'm kind of thinking like the smaller mom and pop type of places, and they're looking at selling, and then you have that discussion with them, being like, you're not going to get what you were got just a year ago. Things have changed.
mm-hmm.
What are those discussions are like? Is it? I mean, just kind of walking them through that, being like you have to be more realistic and lower your price, or do you talk more about keeping the asset and just managing it better to make more money? How does that play out?
So the latest properties that we've underwrote for taking to market, there's two boat and RV facilities that we looked at down here in Texas. And so when we underwrite a property, we don't, I don't at least reach out. I don't ask the seller what they're looking for in price at first, because I don't want that to bias my opinion and try to get the deal done. I want to give them my honest opinion on what the market might pay for this deal. And so I get all their financials, but I need to underwrite it. And then we do a broker opinion of value for them. And sometimes I'll send that off also to a bank. And so I use a broker, loan broker, to look at these deals and give us a debt quote and give us their opinion on it as well. And so once again, I don't share my pricing with them. I just say, give me your opinion. So it's an unbiased opinion. So the last two deals that we've underwrote, both me and this loan broker, so I use Terrydale Capital, Lorenzo De Leona out of there. We came in 20 to 30% lower than the seller was willing to sell at.
Gotcha. Yep.
And talking to other brokers, I mean, that's very similar situation. I mean, the seller expectations are just not in line with what a buyer can get done out there in the market. And so you just basically say, I'd love to get this listed for you, but it's not the right time to get it done, because I just don't believe that there's a buyer out there that could get this deal done for you. Yes, there's maybe a few 1031s out there, but at the same time, I don't know that even they would be willing to put the cash into this deal to make it work. Because I mean, even if you're paying cash on some level, you're still looking at the returns, and the returns aren't there for that kind of price difference. And so basically they keep the property, they hold on to it, they continue improving it and working on it. And we'll meet up a year or two down the road and see if they're wanting to sell again, and we'll take another look at it. But that's been the story. It's just, there's a big price difference. And I mean, that's the latest too, but that's been the story all year round. And there's just been deals that get under contract, they bust. And they bust for financing. And that's been the story for me, at least this year. I think most brokers that I've talked to at luncheons and other things and other presentations, I mean, activity's down at least 50%, some are down 80%. I mean, it's been a big change from the last 2 years.
Gosh, well, don't want to hold my breath to see how long this is going to last, but who knows? Don't know. I mean, I had a conversation with an owner a couple of days ago. That's why I kind of brought that up about the expectations and the not selling and just kind of biding your time and how long you can wait. So that's kind of what I told him. Like, you're not going to sell it for that. So in the meantime, let's maximize what you got. Kind of lay that game plan out for the rev management and set the marketing up. Like, all right, this will help. Bide your time until you can actually sell again. When's it going to be? I don't know. Who knows? But that's what we're having these conversations, and kind of keeping everybody in the loop, getting a kind of finger on the pulse of what's going on. And who better than have a broker that's in the thick of it? So that's helped having you come on, Ryan. So thank you very much. But before we wrap up, I mean, obviously you know what you're doing. So people are interested in your area in Texas, want to reach out. How do they get a hold of you?
Yeah, so they can email me. So that's Ryan@CRDRealty.com. Got a website as well, CRDRealty.com. Can reach out through there. or just directly on my cell phone. So 713-702-6886. Be glad to talk about storage, talk through things, provide a broker opinion of value. So that's always free of charge. Just give them an idea of what I think the market might pay for their facility. Yeah, love to talk to anyone.
Perfect. All right. Well, thanks again. We'll talk soon, man. See you, Ryan.
Thanks, Jim. Have a good one. Bye-bye.
Before we wrap up, just a quick reminder. Do you want to level up your storage game? Visit theselfstorageshow.com. Grab some high-value freebies, check out top vendor spotlights, and stay in the loop with our newsletter. Do you want to chat about becoming a client with 3 Mile Storage Management? All the info's there. Plus, if you've got a story to share, we're listening. Everything you need is at theselfstorageshow.com.